Cruise lines have been on a wild ride since the pandemic started in 2020, but the turbulence might not be over, and I think these stocks may actually be in trouble long term. Let's get into the challenges they're facing. Now, you may remember during the pandemic, all of these cruise lines had to take on a bunch of debt just to survive. They didn't get bailouts from the government. Balance sheets really ballooned. Total debt for Carnival, $35 billion. Norwegian Cruise Lines, $13 billion. Royal Caribbean, $23 billion. That's a lot of money they're eventually going to have to make a return on and pay back to investors. I will get to how that is going to be really problematic given rising interest rates in just a little bit. This middle line operating income on a trailing 12-month basis is backward looking, so it doesn't include some of the improvement that we've seen in the business, but I do think it's illustrative of where they're at right now. Losing billions of dollars on operations, that's not sustainable at this point. I did put in here 2019 operating income because I think that's a really good benchmark to think about this debt load. $3.3 billion in operating income in 2019 for Carnival. Now, given their $35 billion debt load, there wouldn't be much money left over to have any sort of net income for investors. So that's really problematic. Norwegian and Royal Caribbean are even worse positioned. Their current interest rates may mean that even if they get back to 2019 operating levels, they're not going to have any money left over after paying interest payments, much less paying off the debt anytime soon. I want to take a quick second to thank this video's sponsor, The Motley Fool. Check out the link in the description to get their top 10 stock picks right now, or go to fool.com/rive. It really helps out the show. Again, fool.com/rive. That's right here. So here's the debt challenge, and there's been a couple of developments just in the last couple of weeks. Carnival recently extended their 2023 debt, which means they don't have any major debt coming due next year, but they only extended it for 18 months at 5.75%. Now, that's not a high interest rate compared to some of their competitors like Royal Caribbean, who just took out $1.25 billion in debt at 11.625%. Now, that's the kind of interest rate that you get before you go bankrupt. That's what's really concerning. And if interest rates keep rising and these companies don't turn operations around, this can be a hole that they just never dig out of. So investors will want to keep an eye on not only the debt number, but what the market is charging from an interest rate standpoint. Once it gets into double digits, I think these stocks are completely untouchable from an equity standpoint. Now, there is some good news out of the cruise industry. Demand does seem to be increasing. We've heard that across the board, specifically in the summer of 2022. So we could see operations improve later this year and then into 2023. That could mean that utilization's going up. Pricing could also go up. That should improve gross margins and operating margins as well, get them a little bit closer to operating profitability. But we're still a really long ways from 2019 operating levels. On the downside, oil prices are much higher than they were in 2019. So that's going to be a headwind. There's potentially a recession here, or at least coming at some point. And then inflation is something that we're all going to have to deal with. That squeezes consumers' pocketbooks and it makes costs higher for cruise lines. So that's definitely not good for their operations. Here's the bottom line at the end of the day. If you're buying a cruise line stock, you expect that there's going to be net income or dividends coming down the line for you as an investor. With these companies at this point, there's so much debt. I don't know that they're ever going to be able to pay that back or make a return from it with rising interest rates. That makes it even harder to get back to cash flow positive or any sort of net income. I think these stocks are still headed lower, and it wouldn't be surprising to see one or more of them go bankrupt over the next 5 years. That's just the reality of the cruise line business. They took out too much debt during the pandemic, and that may not be something they're able to recover from.